2021. And here is the thing about industrial silver. Once it goes into a solar panel or a circuit board, it is gone. Forever. The amounts are too small to recycle economically, so every ounce used industrially is an ounce permanently removed from supply. That is wave one. Wave two is the one that changes everything. Silver is money. It has been money for 3,000 years, not 300. 3,000. And right now, something extraordinary is happening. India's Reserve Bank has issued regulations allowing silver to be used as formal bank collateral, effective April 1st, 2026. That is the first remonetization of silver by a major economy since the 1800s. 1.4 billion people are about to gain access to silver as a recognized monetary asset. This is not speculation. This is a regulatory fact, published by the RBI. And here is what makes this explosive. When silver acts only as an industrial metal, its price is driven by factories and supply chains. Predictable, manageable. But when silver acts as money, when 1.4 billion people start treating it as a store of value, the demand curve goes vertical. Gold has been riding this monetary wave for years. That is why gold keeps making new highs. Gold is the mother metal of the monetary system. But silver is gold's baby brother. For 3,000 years, silver has followed gold, just with a lag. And right now, the lag is the widest it has been in modern history. Silver is absurdly cheap relative to gold. The gold to silver ratio is still near historically extreme levels. Every time this ratio has been this stretched, silver has violently repriced higher to close the gap. Not slowly, violently. So you have two massive demand waves converging at the same time. Industrial demand that has overwhelmed supply for 5 straight years. And monetary demand that is about to be unlocked for 1.4 billion people. Both waves hitting simultaneously. And the supply side is actually shrinking because China just locked 60 to 70% of refined silver inside its borders. This is not a setup for a 10% move. This is a setup for a paradigm shift. Now let me connect the dots to the broader financial landscape, because silver does not exist in a vacuum. And what I found here is what convinced me that $300 is not just possible. It might be conservative. I pulled up the US dollar index going back to 2010, and the long-term momentum trend is broken, not bending. Broken. The dollar has slipped below a structural support line that has held for over a decade. Now, the dollar is not collapsing overnight. It is a slow decay. But when you look at the M2 money supply data, you can see that every single decade, the money supply increases by 80 to 90%. That is not conspiracy. That is Federal Reserve data. Every decade, they print 80 to 90% more dollars, which means the purchasing power of each dollar drops decade after decade. And precious metals are the mirror image of that decay. When the dollar weakens structurally, gold and silver do not just go up. They reprice to reflect the cumulative loss of purchasing power that was hidden during the strong dollar periods. That repricing is happening right now. But wait, there's another factor, and this one genuinely worries me. In a good way for silver, in a very concerning way for the broader economy. The government bond market is cracking. I looked at US Treasury bond futures, and they are trading around 115. Recent lows hit the 113s. And here's the line in the sand. If bonds drop about 3 more points into the 112 range, the holding pattern that has kept bond prices stable since the 2022 collapse breaks down. And when that breaks, the US bond market starts to look like Japan. Japan is already in crisis mode. The UK bond market is under stress. Government debt globally is at levels that are making even the most conservative investors nervous. Jamie Dimon himself said months ago that you cannot keep pushing this down the road. When the average citizen who used to feel safe putting money in government bonds starts to have doubt about that safety, that is, and I am not being dramatic, a nuclear event for the financial system. Because if you cannot trust government bonds, where do you put your money? For 3,000 years, the answer to that question has been gold and silver, and that answer is coming back. And here's what ties it all together. The commodity complex is breaking out. I pulled the Bloomberg Commodity Index, and it has broken above a massive long-term momentum base. Crude oil just triggered a breakout that our analysis says ends the 2-year depression in energy prices. If crude goes from $60 to $90, and 90 is not even expensive by historical standards, since we were at 130 in 2022, that is a 50% jump in gasoline prices. Wheat has joined the breakout too. When commodity prices surge, the average consumer gets squeezed. Cost of living goes up. Inflation expectations rise, and the monetary metals, gold and silver, become the only